Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. The Broiler Chickens. Let's just make sure YouTube's working. And welcome back to... Yay, there it is. Hey, there's already somebody over on the YouTube page. That's kind of cool. It's kind of fun seeing people over on the YouTube page. We got a pretty full hangout here. Ralph, meow. Bark. Meow, roar. There he is. Actually, when I was loading up the Hangout this morning, it was just like, it reminded me of the old days, right? Remember we used to put those gifs of the cat banging on the keyboard? How could I enter the Hangout fast enough? It was great seeing you guys all piling in here this morning. And, for the YouTube audience, if you're watching this later on, if anything, I'm so super impressed with the community here. Really working together, talking to each other, validating what we're seeing in the market, slowing people down that are sort of FOMOing and freaking out. There's no doubt about it. Without a shadow of a doubt, we are, living in some challenging times right now. Interestingly enough, I wasn't alive during the Spanish flu back there in 1918. So I can't comment directly on that, but in my 30 years trading in the market, I haven't seen a market state like this before. It's quite remarkable, really. I suppose you could make the argument that doomers and gloomers have been predicting this all along, and I suppose hats off to them. I suppose, something like this was bound to happen eventually. All these countries playing around with these deadly biological weapons, and it sounds to me like one of them got away from them. Oh well, the best thing we can possibly do, I suppose, in times like this is, just be thankful for every single day that you have. I do that every single day. It's weird for a guy like me, is I lost everything 9 years ago, actually. 9 years ago, and 1, 2, 3, 4, 5 days. So it's been an anniversary of me. It's a tough time, and actually it's interesting because Liam also has a very tough time this time of year. So in a weird sort of way, and I know it kind of sounds cheesy, guys. I don't mean to come across cheesy, but I already lost everything. If anything, it's kind of weird. Over the past 9 years, I've been living this new life where I don't have anything to lose. So as a result, what I really try to do is just be a demonstrator of best practices. All the crap that it's not crap, it's serious information. All the stuff I'm trying to teach you when you watch these free YouTube stuff, this is stuff that I've been learning. And a lot of it I had to do self-teaching, or pick up a little piece from this person, a little piece from that person, etc. It's like 30 years of my career in the markets. And in a weird sort of way, I live a life now of, really, I don't have any personal aspirations because, like I said, I've already lost everything. So it's just really what I want to do is just sort of be a demonstrator of best practices. So, I don't want to sound like a dick, but demonstrator of best practices, you probably really shouldn't be in the market too much right now. Full disclosure, I am sitting on cash, a lot of cash. I did go and buy some stock there at the beginning of the year, and I love crypto. Crypto always has sort of a special place in my heart. So, I've already funded the crypto accounts, and we're sitting on BTC. It's just a question of, do I have it in BTC, or do I put a little bit into shitcoin, de jure, whatever, and I have fun trading that around, but I'm not taking massive amounts of risk. And a lot of my net worth right now is just sitting in cash. I've tried to counsel the public that, through these kind of terrible times, oh boy, I'm getting messages coming in right, left, and center. Am I still recording here, guys? Or is somebody, are you guys trying to speak up to me here? I don't know, is the YouTube page not working anymore? Yep, we can hear the dings. Yeah, somebody sure is sending me a lot of messages. Let's see who it is. And it's always one person who doesn't even realize that the show's on. Yeah, it looks like it's somebody. Somebody reach out to Dancing Doubles and ask them if they could maybe just refrain from PMing me right now. Holy Jesus. Cure. The worst part about not the worst. The worst part about capitalism, I suppose, in a weird sort of way, and I was trying to convey this to somebody earlier today, is there always seems to be a bull somewhere. And how ironic, Daniel is just a sick trader. He's bought the Kool-Aid hook, line, and sinker, and he's just a monster. I'm always going online about what a great trader he is, and look what he's doing on this Cure coin. Way to go, Daniel. Oh, so proud of you. You're just the best. So, the irony of it all is, ironically enough, in this kind of market state, crypto is actually not such a bad place to be because, the worst part about the stock market and, really, the stock market is they are earnings engines. And I don't know whether you guys have seen, Goldman Sachs is saying that we expect a 22% decline in GDP. 22%? Holy shit. That's a pretty big number. That's not growth. That is ungrowth. What do you call ungrowth? I don't even know if they have a politically, you can't, the worst part about it is the bankers, they want you to keep borrowing money, and their whole business model is this idea of inflation where they can charge you a spread on that inflation rate and make a profit. So when we go into deflation type environments, they will never say that word because, of course, that kills their business model. So they'll use fancy terms like, oh, no, this is a disinflation environment. Fuck you. Jeez, such a joke. This world drives you crazy. But anyway, point of the matter is, technically stocks are a fugazi, right? They're only worth what their latest earnings are. And the worst part about it, what I'm hearing out of the stock market, is that companies could have taken the opportunity when interest rates were really low and they were making money, especially companies like Boeing, because fuck Boeing, they got government contracts. That's like guaranteed money coming in. That's taxpayer money. If anything, taxpayers should be like, what the fuck? So what do? With the money, they go and buy back their stock, bid the stock up in the marketplace, and of course all the directors and stuff have stock options. So they all get rewarded for getting this stock price up. But you actually look at the company balance sheet and you go, well, why are you carrying so much debt? And then what happens if those earning streams maybe come into question? So you're seeing the house of cards unraveling on Wall Street right now. And just for whatever it's worth, I lived and I grew up in a world with an SEC that had a backbone, with government officials that actually had some sort of moral responsibility when they took jobs. What we're seeing out of these U.S. senators. When I was growing up, when you were elected to public office, it was required that you put your assets into what they call a blind trust, where you didn't have any ability to, in essence, insider trade the market. Now it's like no big deal. Nobody gives a fuck. And I hope that what we're seeing, I see a lot of backlash from what we've seen out of two senators. And one of these senators wasn't even elected to the job. That's the worst part about it, is this lady bought her Senate seat, and it's not even like the good voters of the state that she represents wanted her there. We have to find out next election whether she'll keep her job. And I hope the good voters of Georgia say, look, enough is enough with this cronyism. But I don't know. Maybe not. The good part about all of this, what I'm finding is, of course, a big part of this audience, this is vindication for you. A lot of the millennials, they just didn't buy into this bullshit. The okay boomers, they convinced themselves that they could literally game the system their whole life. And I think this whole thing's going to come back and blow up in their faces. And it'd probably blow up The sad part about it is, Generation X, which is what I'm part of, and then the millennials and stuff, we inherit this mess. Thank you very much. And I think a lot of millennials are like, fuck it, man. I don't even want to be a part of any of this. I'm going to go buy my Bitcoins and I'm checking out of the system. So, the interesting thing is through these, in our education programs, and it's been my general belief, I've been working in this industry for 30 years, that we follow very predictable money flow patterns. And there was a gentleman on social media, Philby, and I think he uses a Bitcoin sign for his name, that actually articulated this well, because I couldn't really articulate the message for my level 1 class until he found a way to show the stock market in constant dollar terms. And so I've been banging these kind of tweets out recently, where what you actually see is this is the stock market through the dot-com boom and then the subsequent mess following, that actually this pattern is repeated constantly in our in the demographic cycle of life, if you will. This is actually a pretty normal pattern. The problem is that the 1%, the baby boomers, who basically, like I said a moment ago, are gaming the system. This is the way that they're gaming us. Like, this is the stock market in regular dollar terms, and they look, and Mr. Trump's like, hey, stock market's at new highs, look how great I am, right? Well, in reality, this is not the real world. The real world is actually this image, where in real dollar terms, the stock market's actually nowhere near those dot-com days. So as I want to give a big shout out to that Philby guy here publicly. That helped me immensely in my school program, try and convey this idea that really the millennials, that Generation X, anybody following these baby boomers, we're getting gamed. We're getting played here. If anything, it's very similar to the way that the politicians are acting in the United States right now. Our generation really got played hard here. It's depressing. So I can understand to a certain degree why people have said, fuck it, man, Bitcoin, cryptocurrencies, I want out. The good part about this, like we sort of said, this is all a fugazi, right? They're fucking around with the accounting here to try and convince you one thing or another. And the baby boomers, they'll just keep buying this story. They don't realize that they're being gamed, but nonetheless. One thing we have to ask ourselves when we look at the stock market is, what is value? Well, value technically is a multiple of earnings. Do these companies actually earn money? If somebody comes out and tells you that we are expecting the economy to shrink by 25% this quarter, that's not going to bode well for earnings. And this whole damn thing could fall apart. I got to you, Colleen. I was able to corrupt you. Colleen says, not me. Anyway, so we're definitely in trying times right now. I don't know whether it's really in our best interest to talk too much about stock markets. What I will say, though, is there are some very powerful messages coming from the market that I do see a lot of people in the crypto space that are also ardent commodity bulls. And I would be very, very careful there. 30-year experience. I've been through a number of these cycles. I was a full-service broker. I had a full book through the dot-com blow-up. We traded effectively through the Bitcoin run-up. Made some great money through there in the crypto bubble. Everything seems to be fitting into my long-term thesis kind of thinking. And basically this fear, greed, asset cycle, ironically enough, and I think I've told you publicly, you're not going to like it. The bottom line here is the fiat system. Now, that doesn't mean Bitcoin's part of it, but the fiat system still reigns supreme here, which means, well, what am I trying to show you here? I'm trying to show you this chart. It means this thing is still driving the bus. Ironically enough, if you're actually a crypto enthusiast, I think you should probably watch. I tweeted out this video. I thought this was an excellent interview. Somebody on the site shared with me.
What if you
1 + 1 = 3, that kind of conversation. And actually, this was put out about 5 years ago. So ironically enough, they were right. And this is almost the trap that I got into in the end of 2017, 2018. I got suckered into believing, oh, maybe this time it's different for the stock market and the broader economy. Not quite. So these guys were a little bit early, and I've, of course, been talking about these cycle pivots for years now. But I thought this was an excellent conversation. I don't necessarily agree with I definitely agree with this gentleman. So if you watch this video, and I'm not quite sure who he is he Mike Mullany or is he Harry Dent? I don't know. But I would definitely agree with this gentleman. And the interesting thing is his whole argument is cycles, demographics, which is what I've been going on forever about. But anyway, that's here nor there. But the guy who's interviewing with him, they basically have the same, so he is Dente, and I totally agree with this guy. He, in essence, is exactly the same argument that I make, is that we actually have to go through this deflating of this massive, ridiculous debt bubble. And the reason, the one thing that scares me about the gold bugs is they don't understand that the money that is going to be printed out of QE4, QE5, or QE6, that money is, the moment they print it, it is literally going to disappear. Why do I say that? Because this money that they're printing is going to go straight to the banks to offset some big-ass bad bond that they already have on their balance sheet. So what ends up happening is the bond just simply moves. It's an asset on the bank's balance sheet, but it moves to this Federal Reserve sort of, off in the ether balance sheet. And that cash that was just created goes to the bank to offset that bad debt. So it's not really like there's a whole bunch of new money coming into the system. It's just literally a one-for-one. And I thought he actually made the argument, the explanation of why all this massive money printing actually isn't your inflation pump that you're all expecting that's going to send gold to the moon. So do yourself a favor, I think, and watch this gentleman and listen to what he says. Because the guy who's interviewing him, he's making the argument, I'm still a gold bug, and after talking with this guy for almost an hour, the guy interviewing him was kind of acquiesced a little bit and went, okay, maybe I'm not so bullish of gold anymore here. But, if anything, I really want to convey the idea that I think that the public, remember, this is the end of the fear cycle. So as the public, what are you going to be buying as the public? Are you going to be buying stock or assets that are trading at deep discount to value? Or are you going to be buying inflated, toppy, over-exuberant assets? Remember that. You and I, we're the public. So we act emotionally, and if everybody in the public is like, oh, the sky's falling, buy gold, right? Okay. Is that the smart decision? Is that really a wise investment? So, the whole adage, buying when they're crying, selling when they're yelling. The irony of it all is that as the bubble's deflating, actually we're finding that gold and silver prices are coming off. I think gold will hold its bid, but holy crap, is silver ever getting its ass kicked? I suppose you could argue that while we're going through this deflation as well, Bitcoin price under pressure. The one thing I really like about Bitcoin, and I don't have a problem going and putting your money in gold, but just try and make darn sure that if you are going to buy gold or silver, you're buying at value. So if somebody really wants an ounce of gold, what's it going to cost them to go dig that ounce of gold out of the ground, right? And that way there's some sort of base value. And I think right now in the gold market, that's about $1,000 an ounce. This number jumps around quite a bit. But if I'm not mistaken, I think the consensus right now, you can see we're hunting intraday setups and stuff. But I think the consensus on balance is about $1,000 an ounce. So, sitting at $1,500 an ounce, you just have to understand there's about a 50% premium to the cost of production. So if all hell breaks loose and people have to sell anything that they can get their hands on, even gold here still has a little bit of a premium. My hunch is, and this is the way it played out during the Bush years, Junior Bush, Junior Bush inherited the dot-com top. Mr. Clinton was able to sneak out of the White House before that meltdown happened. And one might argue that an event was engineered to change the conversation. That's a very politically dangerous statement and road to go down. But at the very least, I'm just going to simply say that I think that the war on terror, quote unquote, it helped change the conversation about the dot-com blow-up and how people lost a lot of money in the stock market through that. And then it also put demand in the form of a wartime economy into the economy to offset, of course, the collapse in the dot-com and tech sector. One might argue that through 2008, George Bush was actually still president pretty much the entire year. The stock market that year topped out in March of 2008. I think it was. Maybe it was 2007. I have to go look at the charts. And it didn't actually bottom until Obama came into power. And they were able to, Ben Bernanke, able to start the quantitative easing program, which was really backstopped by this thing called TARP, or the Toxic Asset Repurchase Program, which was in essence nothing more than the U.S. government coming in and putting a floor in the market and saying, fine, no more down, you go up now. I'm left scratching my head. And the interesting thing about 2008 is I literally watched, you can go back and look at the study. It started off actually, I remember back in 2007, there were small credit companies in Canada that started to go under, and it was a bit of a warning sign. The big warning shot for Wall Street was a company called Bear Stearns started to get into trouble in the sort of spring and early summer of 2008. And then when they went under, it was like a cascade. That started to take Lehman Brothers down, which started to take companies like AIG down, and it just turned into a cascade. I don't think that this cycle is about financial assets. And I don't think it's about the banks. And I don't think it's about over leverage there. So the interesting thing is, and we are starting to hear this a little bit, that the banks are actually being encouraged to try and redeem themselves through this crisis. This is all about health and people not working and the economy just coming to a grinding halt. The banks, ironically enough, through this can actually weather a bit of the storm. And I've sort of said this to the public before. In 1980, 81, 82, in that recession, that was the end of a commodity cycle. The Canadian dollar got destroyed. And gee whiz, here's the Australian dollar. Poor guy in Australia, and all my poor Australian buddies. I was chatting with somebody on Twitter here about currencies, and through the weekend, actually, this is a really good time to just simply go and look at some bigger picture. But, and I had sort of made this earlier, and this is why I was talking about gold and silver earlier. I mean, obviously, Canada is very crude oil related. I'm actually hearing talk that their price wars. One Russian guy said, hey, we can make money on oil at $8 a barrel. Oh, Jesus. So, I thought it was amusing that the Americans finally went, oh, okay, maybe we better sit down and talk with the Russians and the Saudis and try and figure this out. But the point of the matter here is something like Canada. Oh boy, what this is bad, bad, bad. And the interesting thing is that this was the end of the fear cycle that was positive, that was friendly for Canada. And now we actually have to go through a 17.5-year commodity bear market. And the sad thing is when I go around Vancouver, I don't talk to many people that actually even lived in Vancouver back in the last time Canada was in a bear commodity cycle. So they don't even know what to expect. I'll tell you, it's going to be challenging. But more importantly, now I think we're, I was chatting with one gentleman here and looking at the Australian dollar. You saw that on the screen as well. Where the heck was it? Maybe it was off of the other one. But I also put out some commentary about the Aussie dollar. Where the hell did I put that? Is it this one? Maybe it's this one. Yeah, here we are. I mean, poor Australia. Australia's getting hit like by 3 different directions. Bang, 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 bang. Wildfires. I mean, this is almost biblical what's happening to them. Coronavirus, of course, the economies are going to be collapsing. The demand for commodities is going to be coming off. I tell you, and the irony of it all is this is, and if you listen to Harry Dent, and I think that's what this gentleman's name was, he talks a lot in this video about natural cycles. And, you shouldn't fight the natural cycles. And if anything, these central bankers try to think that they can outsmart the natural cycles. So that was this gentleman, that conversation. And actually what ends up happening is at the end of the cycle, it comes back even harder. So, the whole scuttlebutt over the past 10, 20 years has been, well, Australia's never had a recession. They're immune to recessions. Uh-oh. Oh, man. They're going to, unfortunately, the pendulum might have to swing violently the other direction now. So, I'm not, you all know when you watch these YouTube videos, I'm not here to tell you what to buy and sell. What I'm here, hopefully what I'm here to do is just simply say, hey, just listen to the market's message. Lower highs and lower lows are a bear market. Obviously this is a long-term chart. This is a monthly price chart, so it's not going to go there tomorrow. But, we should be expecting a 17.5-year commodity cycle, which started about 2.5 years ago. So we've got about 14.5 years left of it. And really, AB equals CDs, heads and shoulders, is you can see where the market is projecting. And more importantly, commodity currencies always lead to commodities. Usually, a country like Canada is very oil dependent and related. So Canada's currency often moves very closely with energy prices. Something like Australian currency, from what I understand, is very base metal oriented, and I suppose also agricultural oriented. The point of the matter here is everybody should look at this chart, and you should, don't look at Australia and say that, hey, the long-term trend is pointing up. The long-term trend has been pointing down, and it's actually been pointing down since about 2013. That's the irony of all this, is that actually this trend is getting pretty, well entrenched. So, just look at it, these commodity currencies, and if they're bottoming and they're starting to rally, and you are a big gold and silver bull and bug and all that, they often lead the commodities. That's probably the best lesson everybody can learn out of today's presentation, is that the commodity currencies often lead the commodity. It was weird. I was going through Twitter and I was trying to find, I used to post out this US dollar chart from back in 1980, and of course on a site like TradingView you just can't find the data, and I can't, it's so tough to search through old Twitter posts, but if I can find it, it's such a great analogy that the US dollar through these fear cycle apexes goes absolutely ape poop, and that's what I see happening here. I mean, this was a violent reversal. I don't see any reason why we can't take out these highs. And of course, that in itself has got to be commodity bearish as well. Tough market, I'll tell you that much. But the great part about all of this is that this is all fugazi. It's all based on you have to believe. The great part for you cryptonauts, of course, is that these assets, at least you can determine what's value, i.e. what's the cost of production. If Bitcoin cannot maintain the cost of production, then basically the miners will be put out of business and the whole blockchain concept fails. And I have seen, I've been in this space watching Bitcoin like a hawk for the past 7 years now. I have not seen Bitcoin trade below its cost of production. I've seen it like dip into cost of production windows, and then almost invariably every time that happens, it moves away. So as I sort of said with gold, I mean, technically gold still has about a 50% premium over that cost of production level. So, in a panic dump, could we see gold prices come back down to $1,000? Sure, that's not out of the question. And the interesting thing with Bitcoin, we have to acknowledge this, is that as it stands, even at now, I believe that, and the interesting thing is faster, stronger, better miners are coming along that are probably even more productive than these numbers. And you could also make the argument that utilities, they'd be more than happy to sell you electricity probably at a lot lower rate now versus this price when crude oil and energy prices were high. In fact, actually, it was kind of funny. We used to joke, Kavarkanator used to tell me you could go to the energy boards in New Mexico and actually negotiate your rate if you wanted to. So the point of the matter here is we sort of came up with this sort of $2,000 to $3,000 number in here, and lo and behold, what a surprise, we bottomed around that price. I don't know, we have this big happening event coming up, and I think that's probably the one saving grace for Bitcoin, is that this number, assuming that all the technology is the same, and I think relatively speaking the numbers are pretty close. We have one site member, Shane, who, and if anybody happens to have that link just handy, I'm sure I have it somewhere around the site. He's actually sort of calculated all the different costs of production based on the different equipment, which is such a fantastic resource. But I would make the argument if you can get your Bitcoins at or below cost of production, then that's value, and that's not a bad place to hide out while growth assets are coming under serious question. I think, with that said, if this number's still 3,000 down here, or even in that neighborhood, remember the halving's over here. That's still a couple months away. Could we get a nice little fuck you down into these levels here before the halving? Sure, it's not out of the question. But I'll tell you, from a value purchaser's perspective, and I think this isn't a bad place to hide out while the rest of the world shits their pants. I got to tell you, like guys like Kavarkanator came in and they bought this original double bottom tag there into that meltdown there a week or two ago. Hats off to you guys. That was a sick trade. We did get 50% bounces out of that. So this happens to be the 38.2 Fibonacci level. And I like to follow this 38.2. I used to work with a guy out of New York named Ray Burchett. And he used to run a program called Intuitive Development for Traders. The interesting thing, I think I've told you guys this before, in his program, he doesn't talk about charts, he doesn't talk about setups, he doesn't talk about, ironically enough, that's actually the easy part of trading. Actually, if you don't know what a divergence is, you're not ready to be a trader. You got to learn that shit, right? If you don't know what how to time an M and W trade and where to have your stops, well, you got to learn that shit first. But his program was all about transitioning from, and in our education program, the way that we talk about it is every new trader, we have to go through an evolutionary process where you start out as a baby, right? I don't know anything. So, and I hate when people come to me to learn how to trade and they've got attitudes and stuff like that, all the baggage that they brought. They don't understand the process and working with a trading plan and logging and journaling and shit. Because I have to unwind and I have to somehow get them to let go of all that crap. Then once we, actually all the level oneers, I can see them right now going, okay, I think I get this. I think I understand. They're not ready to be traders yet. They're still in that learning process. Then we get to the point, all right, I got a trading plan. I understand the basics of setups. I'm just going to slowly sort of learn how this crazy body of mine works. We ultimately want to get to this point where she's not really thinking about the way her legs work. She sees something and she goes. So that's ultimately where we want to get to, where she's intuitively already running her body. There's something out here that she wants, or he, I don't know. And she's just going for it. That's that intuitive development. That's our ultimate goal. And, like we say in our education program, and I love Grimm's insistence that really all new traders, you got to probably take about 100 paper trades. 100! That's a lot of fucking trades before you can get to this point where you intuitively already see everything developing and you're just going for it. So back to our story. I worked with a gentleman who runs a program called Intuitive Development for Traders. And he, when we talk trader talk, right, he would just simply say, and his rule was for him that he had to see a resolution of 38.2. I know it's probably hard to see there. Maybe I'll change the color. Before he would make any big decisions about whether this is, because really, you get a big dump like this, that's a very bearish move, right? It seems logical. And we have to let the 38.2 bounce happen. This is what we call the dead cat bounce. And then we actually find out whether this is still a bear, and if it is, it probably is going to do something like this. And we continue on our way down. Or maybe we've actually come back down, test the lows, and put in a W and start working our way higher. If this kind of scenario happens, then what it really means is I'm not a bear anymore. Now I'm a trading range. Bottom end of the range, top end of the range, right? And maybe we're just going to play trading range ping pong for a while. So, super important. We can't make any conclusions about price here whatsoever until this 38.2 has been resolved. It's such a simple concept. It keeps you out of a lot of trouble and just helps you see price action clearly. We did have a fun little tool that we've been experimenting with, our little chaos levels. And when you get an M or W in price, this chaos fight here, if the bulls have actually won, well, it can project upside and downside targets. But just because those chaos levels are there, that's not enough of a reason to justify taking a trade. How many reasons should we have to take a trade? I don't know. Does anybody even remember? See anybody over on YouTube if they're even listening. Luca! My name is Lucas. I live on the second floor. No, that doesn't work. Lucas? I think it was Luca. From back in the 80s. Do you remember that? Anyway, nice song. Any of you guys? Nobody? Hey, there you go. There's a couple people answering. Woohoo! 3 unrelated reasons. All right. So, I do like painting chaos levels to give me an idea that, like we did one off of this top. Remember when we did that about a month or so ago? We were like, oh, chaos levels are down here. And we're like, oh, fuck, I hope not. And sure enough, so, the chaos level is there. And right now, off a stamp here, if I zoom out, where's that chaos level painting right now? We'll do, I thought I had it on here. Is that it there? Maybe not. I I know I put one chart out recently that had it on here. Yeah, there we are. So this chaos level, if this double bottom holds and they do not break it, well, it's actually painting an objective way up here. And the interesting thing about this is, if you just draw, I don't know how accurate this is as a trend line. I think that's probably like an AB equals CD. But I will just draw a trend line on here. I've seen lots of times where, oh, that's what this line is, yeah. I've seen lots of times where the market will just slowly work its way up and might even play with this trend line here as it works up and tests these highs. That could happen. So, as I see price right now, we just did our 38.2 bounces. You can see 38.2. Interesting how we never got to 50% level. And I wonder whether there needs to be a little fuck you move against this high to tag 50%. I don't know. That's tough to say. Right now, when I look at this price pattern, I think, in the free videos we talked about this too. If we zoom down onto, say, like a 4-hour chart or something, you can see that the market tanked, dead cat bounced up to this high, then came back down to this low. So if we go A, B, C, D, it paints A, B, C, D objectives up into here. You could have botted this trade and taken a little long trade up into there, but I think as I sort of said off the higher time frames, the market broke hard there. I don't have any reason to suggest that this market is bottom. So a guy like me, I don't really like to take these lower time frame long setups in the face of a bear market. I'd rather actually be hunting bear setups right now, believe it or not, looking for trend continuation. As you can tell from this chart, at the very least, what I'm expecting now that 38.2s have been resolved, I think if I'm not mistaken, we're starting to get some pretty nasty momentum signals in here. But I don't, actually, one of the reasons why I like the idea of the market coming up here is I'd like to see a nice bearish divergence develop here, and I don't think we're getting that yet. Yeah, so you can see off of this high corresponds with that high in MACD. So we don't have a divergence yet. Remember I said I love divergence. I mean, divergence is so sexy to help see bottoms and tops, right? Well, it's not an example of a divergence, but nonetheless. As well, too, what I've been counseling on the site is our CTO, Sjord. He absolutely loves to follow RSI studies with Bollinger Bands on them. And when we're looking at the daily chart here, you can see they are just a million miles apart here. This, in essence, this one image right here says, expect a lot of volatility. We're not coming up with any sort of trending signals anytime soon. We are in a very, very volatile market state right now, right? And you can see, boom, that's what I call volatility. If anything, what we want to see, and I've kind of showed you this before, is you see how the volatility came out of price as we consolidated down in here, right? Something along those lines. Come on, you. And I always do this to fight with the damn charts. You can see how the volatility came out of price, and then that started the bull. And then you can make the argument exact opposite side. Volatility comes out of price, and we start back on the bear. So if we do believe that this actually is a bottom, what we really want to see is volatility come out of price, paint nice W's, just like this is a nice M, right? And these are nice W's. We want it to paint nice pretty W's down in here, bring the volatility out of price, and then we might get a half decent setup. Right now, as I said, all this really looks like to me is dead cat bounce, blowing right into 13 EMAs and 38.2s. On the shorter term, if we sort of zoom in and think about the big picture here, okay? World's in crisis. People are scrambling for cash. The world is up to its fucking eyeballs in debt. People have to make their mortgage payments. They have to make their credit card payments. They have to make their car payments. They are blindly told invest everything in the stock market. Your 401k, right? All that kind of talk. So And then, bombshell, we're actually hearing that a lot of people are actually not only, why are people losing their jobs? I don't get this. Shouldn't the employers just say, look, we're closing down for a week or two? You still have your job, but, don't come to work for the next couple weeks. It doesn't make any sense to me. Well, that's fine, but why are people losing their jobs over this? Doesn't make any sense. Say, well, you're furlonged until we get back together. Well, then that's just bad business, isn't it? So we've set ourselves up for failure across this society. Sad. And, sadly, when you set Jesus, people, I live this life every single day of my life for the past 19 years. If I set my son up for failure as a severely disabled child, he goes fucking crazy. And I've seen it. I know what crazy actually looks like. I've seen it right in front of my face. And trust me, crazy is not fun. So I literally spend my whole time with him. I got to tell you, raising a special needs child, that's probably the best possible, market education possible. You have to set yourself up for success. Don't put yourself into a high anxiety situation to begin with. And you should be able to look 3 or 4 steps down the road. Okay, well, I got $100,000 to work with. I'm going to throw $30,000 into this trade idea. Whoa, what? What the fuck? Something that really bothers me immensely is people don't understand one trade that goes wrong can destroy you. We had a gentleman who was on the site when he first joined us. He was an extremely emotional gentleman. We spent a long, long period of time talking him out of the emotional responses and to trade setups. He worked extremely hard focusing in on his setups. And so much so that there's a setup on the site that we actually named after him because it's very effective. And then I see on social, and he's gone off and, run his own business and he's very successful. But then I see comments like, I'm going to sell my house and everything's going into this one asset class. And it's just like, oh my goodness. Please understand, everybody, one wrong trade can destroy you. And also, please remember, everybody, you gotta have to have a home to live in. We spent a lot of time in the lounge this morning while the level 1ers were in class, sort of joking about this. If he's right, he's gonna be famous. If he's wrong, he might be living in the poorhouse. And the worst part about it is, crypto Twitter and all that kind of stuff, they'll forget about you very quickly. If he's wrong, the world moves on, but he's broke. And that's the end of that. So, there's no guarantees in life at all. Trade your plan. Take appropriate risks. Trade setups. Frankly speaking, I don't see a trade setup here on Bitcoin yet to get all super ridiculous bullish long. I do like the idea, and especially, given the broader economy. Fuck, we might wake up tomorrow and the stock market is closed. If the stock market's closed and somebody needs to pay their mortgage and they happen to have that little Coinbase account sitting there with 0.25 BTC on it, I think the odds are they might just hit that goddamn bid to get that cash. So, is this really the time to go all in? And to basically mortgage your future on one bet? That, sadly, also, too, this is a hallmark of exactly this part of the cycle. People are fearful. That's why I call this the fear cycle. This is all hell breaks loose. And, the worst part about it is that people make incredibly irrational decisions through these kind of environments. Hell, I even see it in TRI management. It's like I had to spend some time just going, whoa, slow down. Trade our plan. If we want to spend money in the market, what's our plan? etc., etc. And I'm telling you, I don't think 2020 is the time to be going all in on anything. So, anyway, I hope that gentleman heard my warning. The irony of it all is I responded back to him that I don't even think he's going to be able to find a buyer for his house. So, in a weird sort of way, he's off the hook. Anyway, remember also too, right? I'm the guy who's been around here for 30 years doing this. There's no fucking way I could stick around 30 years doing this if I kept taking like big shots and blowing up. You know, the irony of it all, of course, is if you take big shots and it works, right? Then you won't hear from me ever again. But at the same time, too, I don't think it's in your best interest to do all-in bets. It's just I've seen too many heartbreaking stories. And like I said, you'll never hear about the heartbreaking stories, or people will make fun of them and stuff like that. But is it really worth risking your entire future? I don't think so. Anyway, I don't know whether I'm helping you with anything I'm saying here today. I do find it, difficult coming on and sort of talking usable information that when subconsciously I have a very hard time suggesting to you that this is actually even an appropriate market for you guys to be risking your hard-earned money. This is an extremely dangerous market state. I will say that, some of the professionals out there in the world, you can see that they're starting to salivate, right? And the interesting thing about this guy's conversation is he's actually saying, why not just go and buy some of these growth stocks when people are throwing them away, which I absolutely love. Disney's got that online service. Do you think people are going to use more online streaming services of pretty princesses? I mean, the answer is pretty obvious. Are people going to be using Apple iPhones over the next 5-10 years? I think so. NVIDIA, are they going to stop making robotic processors and artificial intelligence processors? I don't think that's going to stop. So I do find it interesting that guys like this are like, well, you do realize that when everything gets marked down 70-80%, right? Good old Brian 78.6, you've heard this before. Then maybe you ought to go and buy some of this stuff if you're a long-term investor. And then you could always, if you want some fun, you can always trade toilet paper futures, right? But to this end, we also, I noticed that some of the old timers, and actually it's interesting, one of the students today made the connection that Larry Williams is the guy that built the Williams percentage R indicator that Brian loves so much that he turned into his Willie indicator. Yeah, you're right. Way to go. You made the connection. And Larry here, he's like, when range expansion happens to the downside and it gets absolutely ridiculous, that's a buying opportunity. Just be forewarned that if you're going to take Larry's kind of approach here, he even demonstrates in this video that sometimes it's a bit early and sometimes he has to take some heat on his ideas. But generally speaking, let's see if anybody can finish this line. How does it go? When they're yelling, you should be selling. And when they're crying, what should you be doing? It's just that it's extremely difficult because we're programmed to be herders, right? We're programmed to follow the herd. Holy fuck, the herd's charging that direction. I better start running that direction too. And we all go off the cliff together, right? I mean, that's the way we're built DNA-wise. So, the irony of it all is if you can force yourself, I actually think this isn't a bad opportunity to do a little bargain hunting. In the level 1 course today, people were pointing out that Michael Dell was going in and buying his stock in size. We pull up the chart, the stock's gotten totally ripped apart here, and gee whiz, in comes a big fat bullish divergence. Now all we're waiting for is a nice W in price, and away we go. I mean, ironically enough, the process, like I said, location, indicator confirmation, structure, that doesn't change. It's the same message always. It's just you have to have the patience and discipline to wait for it. And then the cliche is, when the time comes to actually buy, you probably won't want to. What do you think? You YouTube audience. Are you really feeling bullish of the stock market right now? Would you step in and buy stock right now? You probably don't want to. That's the irony of this game. Having said that, like I've said repeatedly here, for most new people and most people who are watching this YouTube page, you're best just to pick the companies you'd like to be invested in, Apple, Microsoft, whatever, and just simply put yourself on a dollar cost averaging program. That nanny nibbles idea. Little old lady risk management idea. And just force yourself that when we're in down markets like this, like Sjord, TRI's CTO, he has a rule that he kicks his Bitcoin buying dollar cost averaging program into effect anytime Bitcoin is below $10,000. And then he just turns the machine on, and once a week it goes in and just market buys whatever the price is, as long as it's below $10,000. And he just does it on once a week, once a month basis. And frankly speaking, for most people in the public, that's really the best way you should go. If, the interesting thing about this year is that celestially, this is like 1 in a million type years. And it's also extremely, what's the word I'm looking for? It's ironically enough, this celestial event in a weird sort of way, and I just sort of made this connection now. But in a weird sort of way, this, actually, I don't know how this is going to work. Let's go like that, and we'll go like that. Oh, no, that's not going to work. All right, you're going to really test me, aren't you? All right, let's go over here. In a weird sort of way, this celestial event this year actually goes something like this. It goes April. Then we have a kickback into the end of June, and then, and this is what I'm really worried about, the really big event is actually in November. So, ironically enough, we're getting the preview right now. And what we might find is that things calm down as we're coming out of April. There's going to be a nice little window for a rally. Of course, Bitcoiners, we've got the halvening coming up in May, so we know that there's going to be a bit of an impetus for the market to move up. The Olympics are going to be, they really want these Olympics to go ahead, so I wouldn't be surprised if they force that down our throats. Interest rates at 0. Usually it takes about 6 months for that to kick in. So what that means is that the effects of this massive drop in interest rates are actually going to be seen in the economy, April, May, June, July, August, September. So end of summer, early fall, that's when we're going to see the effects, the actual effects of these lower interest rates. We got this massive stimulus program that's being planned. So I get the impression that we're going to reflate a bit here. You might see gold actually rally up to new highs. It wouldn't surprise me. But what I'm really worried about is next November. So don't fall in love with anything through this. My hunch is by next November, all hell could break loose again. If anything, what we're thinking at TRI is we might hunt some longs, maybe through the options market. I don't really want to get too wrapped up in the long side of the market. But what I really want to do is get serious about hunting put ideas through this rally peak window, getting ready for next November. So that's basically the way that I'm approaching this right now. And, the worst part about this is we're not even through March yet. Oh, Jesus Christ. My hunch is we still have another 2 weeks of this shit ahead of us. So just be prepared, okay, everybody? We haven't bottomed yet. I could very easily see all of these markets move to new lows. The good part about it for Bitcoin is at least it does have a nice cushion in here. I mean, we could literally come off $2,000 here, and it still hasn't broken these lows over on the leveraged exchanges. And I think I've told you guys before too, for me to actually think that there's a bottom in this market, I want to see some daily divergence. So this recent dump, you can see the momentum, all it did was V bottom. If anything, believe it or not, remember that those RSI studies I was showing you earlier? What I would prefer to see happen is let's just calm down, right? And volatility comes out and we consolidate. Maybe we make a divergence through here or something, and away we go. But this is not a buy signal right here for a guy like me. And like you can see, A, B, C, D, we might still have to work our way a bit lower here, right? There's that AB equals CD objective. It's just sitting there. And what I find really spooky is notice good old Raf and Bobo's 877 is also sitting down there. So, you know, as I always say with everybody, I'm from Missouri. I'm not going to call bottoms. I'm not going to pick bottoms because that's just ridiculously dangerous. You know, that's where your ego comes in. I want to be famous for calling the bottom and you know, a million subscribers and likes and all that kind of fun stuff. I have to I mean, you can see what the W's look like. This is what I have to see for me to say, all right, we have now bottomed. We're ready to turn back up. So, yeah, that's right, Sean. If you don't know the state motto of Missouri, they are the show me state. So, I'm a little bit encouraged by Bitcoin here just in the short term, in that we didn't carve out a fractal here. You notice that we have this massive doji. And we also have this little doji right beside it. This is basically, I guess, Friday's action, Saturday's action. And you can see, we got another inside bar, but we haven't lost this low. If we lose yesterday's doji low, that is a sell signal unto itself. All right, that'll be an inside bar reversal. Down we go. So it's interesting how we came down and flirted against that level, and then they backed her away. We probably should want to watch that. You know, this is on what, MEX? That MEX number is 58.60 even. Right now we're sitting at 60.20, 60.30. As well, too, I'm watching very closely this trend line. And basically on the site, our consensus is if we lose this trend line and M out on the other side of the trend line, look at the battle going on right at that trend line. If we lose the trend line, then M out on the other side of the trend line, this now becomes all open air down here. And of course, like we've said repeatedly, wicks and tails like to be eaten. And then if we do crazy things like we draw reload zones, really you should be able to see exactly where the fight is going to come in to try and defend the lows. But, you know, given the broader market state, you might find that people that are coming in to defend those lows, they get absolutely run over. Totally possible. This, if anything, is an excellent analogy of market state. So you can see there is reload zones, there's candle body lows, there's 78.6s, there's 61.8, good old mountain. You can see we're below value. So if there's going to be a fight to actually determine whether Bitcoin is actually bottomed here, I think it comes in down here. So we're between about 43 and 4,800 over on MEX. Well, as I said, so, you know, there might actually be a nice little intraday trade that takes us down into those levels. That's totally possible. You know, for this YouTube audience, I don't really want to go down to two lower time frames. So just keep this at the higher time frames. So that's sort of what I'm seeing right now out of the corn. We got a brick wall of resistance that was up against 38.2s, natural. AB equals CDs, finished, natural. Starting to paint inside bars. If we do fail here, odds are probably down into reload zones. And if we're really lucky, fingers crossed, We do something like this, and maybe we can get one of, remember Josh? I think his name is Joshua. Josh on Twitter. I can't remember. He's got OLG. I don't know. Anyway, I think you all know him. He's really big on the Adam and Eve bottoms. So in essence, this is Adam, big V, and Eve, the W. So if we're really lucky, fingers crossed, they dump. Oh my God, I need cash. But the buyers absorb all the selling into these tails. We can put in a W, and then we can start seriously thinking. Thank you. Random desk, you got it. If I was sort of like a wish list over the next few days of what I'd like to see, it's probably something along those lines. The thing that sort of makes me feel as though the odds are that this is going to play out to the downside is if we look at his brethren. Remember, good old Litecoin and Charlie Lee. I still think Charlie is Satoshi. But that's another conversation altogether. But you notice that if we look at Litecoin, he has actually already confirmed this is actually what's called a diamond pattern. So the diamond actually looks like there to there. It's not really the best one, but nonetheless, there to there. Whoops. There to there. Oop. Oh, come on, you. All right. Having trouble thinking. There to there. And there to there. So, not really pretty, but nonetheless, there it is. Not weird how it's sticking like that. Oh, maybe because I'm so zoomed in. Anyway, and of course, as I had said there on Bitcoin, same sort of logic. A move through this low is actually a sell signal. So, Litecoin has actually already tripped up the sell signal. You can see that there, and actually it's even sitting right below there. Sometimes you can get the market will head fake and then spring out, kind of like maybe what Bitcoin just did there. But the fact that Litecoin broke, confirmed that inside bar failure, and now is sitting there, that's not a good sign. That you got to see buyers step up and get that fucking thing out of there. My hunch is same sort of conversation we had about Bitcoin. Probably have to come down, and Litecoin looks like it's about 28 to 32. And wicks and tails like to be eaten. Candle bodies is trade location. There's a good old chaos level down there. Bottom of value. So I actually like the idea of a nice stab on Litecoin down into here. And like I said, the sell signal actually already fired. So, and then I think on Ethereum, it's the same thing. And actually, I saw some people on social media. You know, the problem here with Ethereum is I don't think we can use the same logic with cost of production as we can use on Bitcoin. So I did see some people on social media starting to talk about, gee whiz, this kind of looks like a big bear flag here, which is actually painting down to, I mean, just ridiculously low levels. Obviously, that's not accurate. I guess I'd have to change that to a log scale to try and figure out what the price is. But, I mean, I don't know if that's going to happen or not. Who fucking knows in this crazy game. But my hunch is that probably the accurate level there is probably off a log scale. Yeah, see what happens when you do that off log. It gets all messed up. So, there we go. So, that's a pretty big drop, eh? The only way to really do this on TradingView is you got to eyeball it. So, you got to be a bit of a leap of faith here, guys. Sorry. But I think we go there to there, which is there to about there, right? Looks visually the same somewhat. So, if all hell breaks loose on Ethereum, we might have to dip all the way down here into the 50s. Fingers crossed. I don't know. Might happen. And actually the level oneers, Grim did a great piece on this. It was absolutely perfect. Somebody's asking, okay, can you tell me where Bitcoin's going? And he's like, well, you do realize your job as a trader is not to predict where price is going. And that's the sad part about this game. Everybody wants to come and learn, okay, so I can tell people where prices of assets are going. That is not the job of a trader. The job of the trader is to try and identify edge, and when you see the statistical probability of something happening in your favor, a good 60-70% of the time it does go in your favor, that you have to identify that, i.e. setups, and then you have to actually act. That is your job as a trader. So, I was a little disturbed where on social media and Twitter and stuff, people are saying, oh, you're calling for Bitcoin Moon. Oh, you're calling for big. I'm not calling for anything. Yeah, I do put out a lot of, just like this. Well, this AB equals CD is floating out there. If we go down to $50, am I going to come back and say, oh, see, I told you, I called it? No, that's not my job. Fuck. But anyway, it is what it is. I don't know whether Ethereum holds these lows. You can see that trend line that we were talking about there on Bitcoin and Litecoin. So you can see it's losing it. We talk about inside bars and fractal tops. You can see we lost the low of yesterday. We know what the public is going to be thinking, if they're going to be freaking out because Mr. Trump's decided he's just going to close down capitalism in North America. Holy shit, I got to get money somewhere. Oh, I got some of these Ethereum things over there. Hit the fucking bit! Not even thinking about what is the value of this. Am I going to be able to make a capital gain off of this down the road? They just need to buy their goddamn toilet paper. And now, what's toilet paper running? Like $20, $30 a roll now? It's pretty fucking expensive. All right, so there's your sort of overview of crypto. It's not really the most cheery conversation. Sure hope you guys got some value out of this. We're coming up on noon on the West Coast. I think we got this going at about 10:30 or so, 10:45, somewhere in there. So hopefully I've given you something to chew on. It's not really been the best, most, woohoo, we're all going to get rich, Lambos. This isn't that type of market state, everybody. And if anything, what I really like to do, I don't have any motivation. You guys all know this is a free YouTube show. I don't get paid any money to do this. It's not even attached with the site or anything. I believe in karma. I like the idea that if you feel like you're getting some value out of this, hit the like button, subscribe. Where's Colleen? Is Colleen still around here? Colleen, where are you? There she is. So everybody in unison, can you please ring Colleen's bell? Ding, 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 ding. Let's all PMA. Yeah, I know. It's because I talk so fast, Bedu. You better still be hunting for that Transylvanian real estate, dude. I want my castle over there. And now is the perfect time. My Transylvanian real estate agent just commented in the lounge here. Wait for it. Wait for it. Anyway, if you did get some value out of this, then positive karma. In fact, actually, what I reckon, what I would suggest, right, is if you think that there's somebody, especially in this time where people are alone, and maybe they have access to YouTube and stuff like this, point them towards my channel. Because even at the very least, there used to be a guy on TradingView that said, Brian, I love loading up your videos and just hitting the play button, and it is the perfect thing to fall asleep to. Because you just ramble on and on and on and on and on, and it just lulls me to sleep. So, but, if there is any kind of information in this that you think that a friend of yours might be able to pick up on, any kind of the wisdom over the past 30 years working in the business about trying to slow you down and don't take too big of bets and all that kind of stuff, maybe spread the word. I think we do pretty good value here, and I don't shill too much. I will say that, if you, did we just put Colleen to sleep? I hope not. She's actually pretty perky. But there are some absolute key elements that if you do decide to live this life of an investor and a trader and all that kind of fun stuff, there are some basics that you absolutely have to get down. You have to understand that you're actually running a small business of trading, and your primary objective is to keep that goddamn business in business. So that means you have to approach investing your hard-earned money in a very business-like fashion. It's just that simple. And there are processes involved. There are procedures. You don't have to go and reinvent this. It turns out it's already been all put in place. Now, if you'd like some industry veterans, and I got to tell you, man, Grimm is one fucking hell of a good instructor. If you'd like some industry veterans, myself, geez, we got a bunch of guys on the site now who are they're just brilliant traders, to help you along that path of building your small business of trading. What are the things that you have to take into consideration? How do you actually come up with reasonable justification for risking your money in the marketplace? How are you going to risk your money? That's what our education program's all about. And we're here to help. And frankly speaking, considering the prices, people spending $30,000 on that online trading academy for basically garbage, where, we've actually had people say, I'm not even quite sure what the hell they taught me for $30,000. The price that we pay, this is comical. This is laughable. Or the price that we pay, the price that we charge. I was almost actually seriously considering giving this away and actually doing this through this whole Corona scare as kind of a good sort of public service. But interestingly enough, believe it or not, and actually I learned this the hard way through a couple guys I tried to teach, it's not in your best interest to get this information for free, because then you actually subconsciously put the value of this information at zero. So ironically enough, it's actually in your best interest to have a little bit of skin in the game to make you actually pay attention and go, fuck, man, I better get some value for this money spent. So keep that in mind as well. But bottom line here, we're here karmically to help. I really hope I give that message. I'm not a shilly type of guy. Hopefully over the past hour or two, you heard something that you could write down in some sort of journal or something that you have on the sidelines while you're watching these free videos, that you go, okay, well, you know what? This was actually worth my time listening to this guy. That's really my intention here. So, all right, everybody, I think I'll leave the rant at that for today. Hang in there. This is going to be a tough market to persevere through over the next year. If you can buy value, we've given you an indication of how you figure out what value is on POW coins if you're a cryptocurrency enthusiast. If you're a stock enthusiast, I would strongly suggest you hunt companies where they're trading less than the actual cash on the balance sheet. Those are the kind of names, value, that's going to survive through this. Without that, especially in the stock market, your asset might just go to zero if all fucking hell breaks loose. In crypto, shitcoins, you might see them just basically turtle through this. So be damn careful, whatever it is you're investing in, that you make sure you understand what value is. Okay, everybody, have yourselves a great day. PMA for the win. All the best, and bye for now.